if you are selling a house in US and you have like a capital gain, there are like very big exemptions of these capital gains. And in Portugal, you don't have those deductions, so high exemptions. And one client can think that he's not having a profit on selling a house, but if he's a tax resident, he has a profit, and you have to declare that. And you have to, even he's not paying any taxes in US, if he's resident here, you have to pay taxes here.
Welcome to We're Moving to Europe. It's a podcast for you if you're an American who's curious or serious about moving to a country in Europe. I'm Casey Kelly. I moved from Texas to Portugal a little over 2 years ago after my young adult kids moved to Sweden and the Netherlands, and now we're helping other Americans research and plan their moves to different countries in Europe without stressing out, wasting money, or losing time. If you want to move somewhere in Europe and you aren't sure yet how to make it happen, you're in the right place. Today, we're talking with Pedro Gaudêncio. He is a chartered accountant. He has a PhD in management from the University of Coimbra, and he is the CEO of Portugal Taxes in Leiria, Portugal. His business helps foreigners understand and manage their tax and business responsibilities when they come to Portugal. So, Pedro, welcome. Glad to have you here.
Hello, Casey. Thank you very much for your invitation.
Yeah.
Let's talk.
Yeah. There's a lot to talk about. First, we want to disclose a couple of things. First, you are my tax professional. So we want to make that clear right off the bat that we do have a professional relationship. And nothing that we're going to talk about today, listeners should not take that as specific tax advice for their situation. This is for information, it's for background, but if you need professional guidance for taxes, if you're moving to Portugal or anywhere else in the world, you need to talk to a professional to get guidance for your specific situation. So with that in mind, Pedro, why don't you tell us a little bit about your background, what got you into taxes and business, and why is understanding Portuguese tax, the tax and business environment, so challenging for people who come here from somewhere else?
Well, it's a lot of questions just for one question, but I can say that I can say a little bit of my background. I've been a chartered accountant, finance director for more than 20 years. So I always work on the accounting and assisting companies, mostly companies, as a consultant, as a business consultant. But my wife, it's not from Portugal. She's an expat too. And when she came to Portugal, I assisted that researching on her side. I noticed that there was a lot of information that was not easy to assess. That would be important to assess. And I started to work on this information. I collect for my personal cases, and then I noticed that there was a breach in the market, there was not enough tax professionals in Portugal qualified to assist expats, and I started to work on this specific niche, and the business has been growing, and there are a lot of people coming to Portugal that need assistance. We know that if they don't have assistance on time, in the process of relocation, you can make several mistakes, and we try to assist our clients in avoiding these mistakes and to optimize their tax situation.
So for Americans in particular, because I think we're unique in that we get taxed on our worldwide income by the United States, no matter where we live. So I think Americans go into it with an extra set of questions or maybe an extra level of potential confusion about how to pay taxes in both the US and Portugal. So are there particular misconceptions that you see when people first get here?
I don't know what I can say. It's like, yes, Americans. It's special in terms of taxation because of the criteria of the nationality. Normally, all countries they just. But I think what I read is just America, United States, and Eritrea that have this specific taxation on nationality. All other countries they just base their taxation on the criteria of residency. This brings the Americans to be much more concerned about their tax situation and about their tax obligations. And a lot of time they have to file 2 times the taxes. They have to file in United States and they have to file in the country where they live. Normally we just assist people that are living in Portugal. Some misconceptions that usually happen is the client or they think that the tax system is exactly the same as in America, for example, and these can lead to some confusions, or they think they are having some incomes and they are having others. No, this is one misconception that is very very common, because we have our own rules, and you cannot just think that if you argue with the tax department that you don't know that rule, that is not a justification. I can give you like two small examples. If you are selling a house in US and you have like a capital gain, there are like very big exemptions of these capital gains, and in Portugal you don't have those deductions, so I exemptions, and one client can think that he's not having a profit on selling a house, but if he's a tax resident, he has a profit, and you have to declare that, and you have to, even he's not paying any taxes in US. If he's resident here, you have to pay taxes here on that thing, or in the question of rentals. If a person American is renting a house in US, but he can deduct a lot of expenses like mortgage or the depreciation of goods, and in the end of the day, he don't have a profit. But in Portugal, we don't accept those expenses. So if he's a resident in Portugal tax department will say that he has a profit in his rental property. And this misconception, this different understanding of the tax legislation sometimes can bring that you don't optimize your tax situation.
Right. Oh gosh, yeah. I sold my house before I moved here because I had heard that there was a large tax on your gains from selling a home, but I guess that's not.
That's usually one of the tips that we usually give to our clients that are in the process of relocation, to make the capital gains that they have before the move. But after there are some specific situations that they with some tax incentives that this could be exempt. But without any tax incentives, this could bring serious disillusions for persons that don't think they have taxes to pay, and they have.
Right. There's a couple of other questions that I get a lot from other Americans who are like, well, you have to pay taxes because you're an American, but you're also a tax resident of Portugal. So how can you afford to pay taxes to two countries? So
yeah. Yes. Well, the countries have the countries sign double taxation agreements. Both jurisdictions, Portugal. We can focus, but this is not just a question of Portugal and United States. There's conventions of double taxation agreement between almost between a lot of countries, and in America, United States have several tax declarations. Probably with Spain they have, with France they have, with other countries that Americans relocate to. There's always double taxation agreement, and usually those double taxation agreement they have like several differences between. I would say minor differences between countries, but in general they follow the same principles of the conventions of OSCE. These agreements they started to be signed. I think in the 50s or in the 60s, and I'm not totally sure about when they start to be signed, but the main objective is to avoid that. It's to avoid that you be double taxed and you pay for the same income, you pay taxes in two jurisdictions. And we deal with that often because Americans file their taxes in US and file their taxes in Portugal. What I can say is like there are several methods to eliminate double taxation. In Portugal have their own, and in the agreements usually the double taxation agreements they determine they say or they make an orientation in different type of incomes who is the jurisdiction that have the right to tax. This right to tax can be exclusively from one country, or they can be shared. And when the right of taxation is shared, we need to understand what is the best strategy to eliminate the double taxation that potentially will occur in both jurisdictions. Portugal has a system that mostly it's in Article 81 that we allow a tax credit, and it shows how to make this how we accept the tax credit on certain incomes. US also have ways to eliminate this double taxation, and we make this looking at each taxpayer. We analyze their structure of incomes. Sometimes we discuss with the US accountant and we try to minimize that the person just gonna pay taxes in one side, or at least in the total bill will be minimized.
Okay. So that's something that anybody who's thinking of moving to Portugal, or I guess really anywhere outside the US if they're American, that's something they need to discuss with tax professionals, both in their home country and the country that they're moving to before they move.
Yes, I think yes. Because, for example, we give advice just on the Portuguese side. We work with a partner in US that if the client don't have any partner in US, we can suggest our partner that we can coordinate, and we know better how to work. But usually we cannot give advice on the US side. We understand, sometimes we understand more or less how things work because of experience that we have. But from the Portuguese perspective, I don't know exactly all the details that can influence the obtaining of tax credits. I can say, for example, in the US side that most of our clients, they use two systems of eliminating the double taxation. One is the tax credit that would be a credit for taxes that you pay in Portugal, and they use that amount as a credit in US, but dollar by dollar. How much you pay here, you can use it as a credit on US. And another method that is commonly used, more for persons that are active, like having active income in the country where they live, or by working for a company, or by making a self-employment activity. There's one method that is the foreign earned income exclusion, that allow them not to pay taxes on that income in the US side. But this is normally a talk that we can share with the client. But after the filing on these specific details, we usually put the client to talk with their professional on the other side of the Atlantic.
Right. Okay. And so that's up to each individual client. They need to be proactive about talking to their advisors in each country and then helping them coordinate.
I think it's very, at least to have one talk to understand exactly the main risks. And in US you have another thing. You have like the not just the federal taxes, but the
State.
state taxes. That's another complication. So all that requires some assistance on the US side. If we can make a coordination on both sides, it's the way to achieve the optimal taxation.
Yeah. One thing I wanted to ask you about is, and this is something that I ran into when I was researching my move, is there is a lot of information out there, I guess about probably every country, but I just experienced it for Portugal because that's where I was looking at, that there's a lot of outdated tax information available on the internet, and there's a lot of misinformation. So for someone who's coming into a new country and looking for a reliable professional, what are the things that they should be looking for?
I would say the best way is like to talk to a professional, or I don't know, contact other expats that are already living in the country. It's also like a good source of information. There are Facebook groups that you can mostly contact with other persons that already know what are the system here and that already have experience that they can share. The information online is very good. It's very good to. There's a lot of information. It's good to at least to have some lights on what you are going to deal with. For example, to understand that the taxes in Portugal are usually higher than in US. That the ways the tax system is different. Okay, I would say you should, every person that is moving, they should make their own research. But when they are to have decisions and like big decisions, like okay, I'm gonna sell my assets or no, or will be any tax benefit or no. How can I qualify? This is the time that you should contact a professional, because okay, sometimes you can invest. Okay, I'm selling. I don't want to sell too much of my product, but sometimes you spend money in a consultation, but you can earn thousands of dollars or euros if you don't make the right steps at the right time. And sometimes you can make the right steps at the wrong time.
Right. So it's just a matter of preparation, vetting recommended people, and talking to them, asking questions. Do you want to move to Europe, but you don't know where to start? Or have you started researching different country requirements and you're feeling overwhelmed by all the conflicting information out there? Check out our new membership community. It's a curated learning space where you can discover and compare your options for moving to Europe, get one-to-one support from me, and connect with other Americans who are planning their own moves. You'll also have access to monthly Moving to Europe mini courses, regular live Q&As, and the tools you need to track your progress, along with reliable, up-to-date information organized so you can find what you need when you need it. You'll also get access to We're Moving to Europe podcast episodes a week before everybody else. And if you sign up now, you get a free 7-day trial to check it out and see if it's right for you. Sign up at We're Moving to Europe on school.com. That's SKOOL.com, or get the link in this episode's show notes. One other question that I wanted to ask, because I've had some people ask me about it, is how Portugal treats retirement income from the United States, like U.S. Social Security benefits, or 401k type stuff, because I've heard people say, oh, well, if I move to Portugal and retire there, my benefits will be taxed, but they're taxed in the US too, I believe. So
Yes, yes. About pensions, in the double taxation agreement between Portugal and US, the public pensions, they are not taxed in Portugal. This is it's they can only be taxed if it's like origin from work for the public sector. They can only be taxed in the country of the source, that is United States. So I have clients in Portugal that are receiving public pensions and they are not being taxed on those pensions. But about social security and 401ks, 401ks, it's like work from a previous employer. Though those pensions are taxed. Those pensions about social security, the tax authority should be common. It's about both Portugal and United States can be taxed. Is usually one of the areas that we work on eliminating the tax credits. I have clients that pay here social security, and then we say, okay, now you go to the US side and put this as a credit in your. But this is not always possible. This is not always possible, but it's a way to. It's one of the areas that we usually discuss the how should be the filing strategy and where we should claim the credits. About 401ks or Portugal usually don't recognize any tax credits on the 401ks because they from their perspective these should be only taxed as on the country of residence. So if US is taxed these 401ks, Portugal will not recognize any credits, but US taxes anyway. So
right.
It's not the most easy situation for the client. That probably after you have to go to US to claim a credit on the tax that you pay in Portugal on this foreign case. So in general, I would say Portugal tax the pensions except in resume. Portugal tax the pensions and social security except the public pensions.
Okay, that's good to know. And that's something that should be part of people's strategy and their spending planning before they get here, if they're close to retirement. Self-employed workers, digital nomads, people who are working remotely for, say, like a company based outside of Portugal, I've seen personally that there's a lot of confusion around the tax responsibilities for people in these situations. So what do you recommend? What do people need to know to start planning before they get here? If they are a digital nomad, if they have their own business, or if they're like a W-2 employee
Yeah.
who's, yeah.
What I can say about this, it's like the tax should be the sometimes what people don't understand, it's where is the source of income, because you've been paying you are being paid by a Portuguese by a American entity like or a W-2 or a 1099 and okay, I'm receiving from US, and I believe that the source of income is American. But the source of income for the double taxation agreement understanding is where the work is being performed. So if you are working in Portugal for a company in US, or you are having an activity that you are making as a self-employed for a company in US, both working self-employed workers are made in Portugal. So the jurisdiction that has the right to tax or where's the source of income, it's Portuguese source income. And sometimes those the company that hire you, they are thinking that you are in US. This can bring a lot of problems because of this confusion where about you are thinking that the source of income is one, and you are paying taxes as that is a source of income from US, and in reality, the source of income it's a Portuguese. This can bring some confusions and some complications in what are you reporting, what are you reporting on a site, and what are you reporting in another site. These is the things that you should be analyzed properly, and a lot of times involves like or finishing a W2 relationship or adopt certain procedures to eliminate these not adequations between what is the source and what is the effective where the work is being made, or a lot of times it passed to open activity as a self-contractor in Portugal. This is it's topics that people need to be aware that the source of income is not who pays. It's where the work is being made.
Okay, that's good to know. I think that's really important. And also, I've spoken with and seen online digital nomads who are like, or people who want to be digital nomads, but they're not doing it the right way. And they're like, well, I work for a company in the US and they won't know that I'm working in another country. So I'm just going to go chill in Portugal, on this digital nomad visa. And I'm thinking, seems like a bad idea from a tax. It just seems like the tax consequences on both sides of the Atlantic could be difficult with that.
We only know about these problems when some years after, like when there are audits. The audits are not very common, but they can happen, and they will just happen after the problem was created and not solved on time, and after the consequences can appear after. I don't know exactly the consequences on both sides, but it's better to avoid these risks at the beginning, not to leave it. Not to leave it.
Right. And also not to assume, as you said at the beginning, Portuguese tax rules are different, business structures are different. And so people need to be aware of that before they come.
If you need to come to a country that you are starting to be a tax resident there, and you need to follow the rules of that country, so it's better to you understand exactly what are the rules. And there are the questions of social security too that are so very important. So it's not. People in this process need to get this information.
Right. Okay. And it should be, I think for a lot of people, maybe a higher priority than it is. And making sure that they understand the information that they get before they make any big decisions. So, is there anything that we haven't talked about that you wish that maybe new American clients knew before they get here, or when you meet with them?
Like to put some attractive on this conversation, and there are also some tax benefits. Like we can talk about tax benefits. Now we have one important tax benefit for people under 35 years old. That's called IRS Jovem. That can get some exemption on part of your taxable income for the next 10 years till people make 35 years old. It's usually one exemption. The amounts for an American standard, they are not very high of taxable exemption. The maximum of taxable exemption on the income is around 20,000 euros. But you can get like an exemption on the next years on the first year is 100% of taxable income exemption till this limit of 28. The next years can be 75% with this limit, 50%. I don't know exactly. I don't remember exactly the details, but you can get an exemption on the taxable income. And a lot of times, considering opening activity in Portugal and the application of the coefficients of this activity, this can reduce the taxable income on the first years, on the first and the second year, exactly for people under 35 to very interesting values of taxes that you are not going to pay in Portugal, and because of the foreign income exclusion in US, and you're not going to pay to in US. So it's interesting. It's interesting this benefit for people under 35. Other thing that we have now, it's called EFECE. This is like the substitute of NHR, or we can call it NHR 2.0. For it's more easy to talk about it. But this is incentive mostly or that requires mostly a connection with the Portuguese economy, and there are several ways to get connected with the Portuguese economy. If the taxpayer can get this connection, prove a real connection with Portuguese companies by being work for these companies or by being member of the board of certain types of companies, they could get like exemption on certain foreign incomes. This is like the same logic of the NHR. That was one very it was a very attractive incentive that worked till 2023. So people could try to understand if they qualify for these benefits and analyze their situation. If
yeah, that's great. I didn't realize that about the under 35s. I had seen something in the news about that, and I assumed it was just for people who were citizens of Portugal.
No.
Yeah.
It's for everybody. It's for everybody. And there are, besides taxes, there are other incentives like for warranties on mortgage, some exemptions on real estate. That can also be interesting. Sometimes I got questioned about with the under 35 clients about these specific topics.
That's interesting because at least in the US, Portugal is seen as like a really hot destination for mid-career people who have their own business or people who are retiring. But for under 35s, it sounds like the government is really trying to attract those folks and keep them in the country.
But the question, it's interesting, but it's limited. From a Portuguese perspective, this 28,000 it's a very high value. From the US perspective, it's not so high, but there are benefits. Okay.
Yeah. Great. All right. Well, thank you so much, Pedro Gaudêncio, CEO of Portugal Taxes, for talking with us today and helping our listeners figure out what they need to know and think about as they're planning or considering a move to Portugal. And we will have the link to your website and your LinkedIn in the show notes. And thanks again. I really appreciate you making time to talk with us.
Well, thank you very much. It was a pleasure to talk with you as always. I hope this will be useful, but of course, for more details, people should talk with a professional. Not need to necessarily to be me, but there are a lot of professionals in Portugal that can assist you. But it's important to make choices with the most with the most information as possible. Okay, thank you very much.
Absolutely. All right, thank you. That's all for now. Thanks for listening, and please drop your questions in the comments. Remember to like, share, and subscribe for more tips about planning your move from the US to a country in Europe. Our producer and editor is Magdalena Lass at Unscripted Creatives. Our music was composed by Sage Barton, and I'm Casey Kelly. See you again soon at We're Moving to Europe.